The iShares MSCI Mexico ETF, ticker symbol EWW, is an exchange-traded fund, ETF, that tracks the performance of the MSCI Mexico IMI 2550 index. This index is made up of the top 25 and 50 companies in Mexico, as determined by market capitalization. The ETF was first issued in 1996 and is managed by BlackRock. Mexico is one of the largest economies in Latin America, and its stock market has been growing in recent years. The Mexican Stock Exchange, BMV, is the second largest stock exchange in Latin America, and the EWW ETF provides investors with a way to gain exposure to the Mexican market without having to purchase individual stocks. The ETF is diversified, as it holds a basket of different Mexican companies across various sectors such as consumer goods, energy, financials, and materials. EWW has a low expense ratio of 0.49% and it trades with high liquidity. The ETF has over $4.4 billion in assets under management. The ETF has returned an annualized total return of 11.4% over the last 5 years. The fund has a good diversification. The top 3 sectors represented in the fund are consumer discretionary, financials, and energy. The top 3 holdings of the ETF are América Móvil, FEMSA, and Walmex. The ETF is also relatively cheap compared to actively managed funds that focus on Mexico. Additionally, the ETF has a low expense ratio, which means that investors pay less in fees. This can make a big difference over time, as fees can eat into returns. However, it's important to note that investing in a single country ETF, like EWW, can be riskier than investing in a diversified global fund. This is because the performance of the ETF is tied to the performance of the Mexican economy, which can be affected by political and economic events. Additionally, the ETF is also affected by currency fluctuations. In conclusion, the iShares MSCI Mexico ETF, EWW, is a great way for investors to gain exposure to the Mexican stock market, which has been growing in recent years. The ETF is diversified, has a low expense ratio, and trades with high liquidity. However, investors should be aware of the risks associated with investing in a single country ETF, and should consider the ETF as part of a well-diversified portfolio.